What's going on, guys? Hey, so second video of the day. I'm not going to do two videos a day. I'm just super excited, so I had to post something. Good news to be stoked about, right? It is our first day in the market today. We finally got some investment money in there because today being Tuesday, was the second day of the week, but Monday the market was closed. Um, it did a double deposit, which we talked about this morning. But so we have some huge information. So as you guys know, we are trading in Sofi. Link in the description down below. Sign up. They're giving $25 of free stock if you sign up an investing account with my link. You only need to fund it with $10 or more. So like you put in $10 or more, they're giving you 25. So that's pretty sweet. Anyway, so we're trading on SoFi today. Though we're going to be looking at Seeking Alpha. This is the website I showed you a couple days ago, kind of walking you through the different investments and why I picked them. But there's a lot of good information on there now that that's synced up at the close of market. So we're going to take a look at a couple things. Let's dive in. All right. So first thing here, guys, we have our dividend portfolio. You'll see up at the top we have $428.89. That escalated quickly. Yeah, I told you guys this morning this thing's gonna shoot to the moon. So basically, a bunch of orders fired off. We got balances on stuff now. It's fantastic. You'll see here a couple things happened. For one, I did sell the shares that I had of QYLD, and now those are JEPQ. I was able to buy two shares. Again, this is separate from the thing. I did want to kind of take a look at it because it is a great dividend paying investment according to people. Problem with JEPQ is that it really just hasn't been around very long. You can see it's kind of all over the place. 1 year chart, it doesn't even have one. Like they started the fund this year. So I figured this would be kind of an opportunity to take a look at it, see if it's something that's worth having. Um, but I'm not really paying too much attention to it. I'm seeing if they have the dividend yield. Yeah, so right here, you'll see on the right hand side, dividend yield was 9.47% last year. So that's pretty enticing. Even though this chart looks terrible, we're going to see what this looks like and we're going to ride that out. But I'm not here to look at SoFi today. We're here to look at Seeking Alpha. Okay. So we're going to go up here. Seeking Alpha has now imported my portfolio. So we have all of our stocks here, all of our funds here, and we can see them all side by side. It's also easier for us to, let's say, look at the dividend payments or when we're going to get dividend payouts. It's a lot easier to sort this stuff. This is where I do a lot of my research, and this is where I find new things. Like I read a lot of investment information on here. It is a annual subscription. It's not a free service, but it's, I think, worth it, especially because we're diving into this. I wanted to make sure we could take this as serious as possible, and I take my own investing outside of this account as serious as possible because it's your money and it's your future. So, you know, that's worth some dough, at least to me. But so I want to take you through this and kind of what's going on here. I'm going to sort it from highest value in the portfolio to lowest. And guys, just keep in mind that this will include a couple things that were here in the portfolio before. But so the highest one is I have 2.12 shares of NDAQ. That's a NASDAQ index fund, right? Basically just follows the NASDAQ, right? So you have the Dow Jones, the NASDAQ, the S&P 500. There's a couple others, but basically it just follows a big group of stocks. It's like owning little bitty pieces of tons of stocks at the same time. So rather than pay like $1 million for a share of everything, you pay you pay $61.76. So, you know, but I got 2.12 shares of that. Ford, we are at 10 shares. That is 11.68 shares. And we have JEPQ. Just talked about that. We just picked that up today. That's at $40.67. But now, getting into the good stuff, this is all fresh. This is all freshly purchased, guys. So all this stuff is brand new, bought since we started, literally today. Okay, so we've got um, 0.31 shares of Realty Investment Trust for a value of $19.97. We've got the total value of each share is $63.80. We got 0.26 shares of SCHD. That's one of those big portfolios that carries a lot of different stocks, focused on paying out dividends, giving us payments once in a while. We have almost or more than half a share of AT&T. Guys, this is day one, and we have a half of a share of AT&T. I am excited to see how many shares of AT&T we have in the next year. Like at the end of the year, we're gonna have I think a lot of AT&T stock, so that'd be kind of cool. Now Procter and Gamble, this is $151.57 a share. This is also why this is a great way to invest, because a lot of people don't have the money to just be like, I'm gonna buy a share of Procter and Gamble today. Like, for most of us, that's just not reasonable to be like, I'm gonna save up until I can buy Procter and Gamble. Like, no one's doing that. Like this way, we're able to get a couple shares here and there. I mean, 7.7. No, yeah, sorry, I lied. So 7% of a share is pretty good. That means that by the end of the month, like, we'll have a share. That's great. We should have a share at least. So, if we get to about a share in a month, like, that's awesome. Now we have a share of Procter and Gamble. Like, a lot of people can't say that they have a full share of Procter and Gamble. It's $151. So most people don't trade like that. JEPI, JEPI. So we have 0.18 JEPIs. Okay. JEPI is one that I really hope to get a lot of too throughout the duration of this thing, because it pays huge dividends. Like, the payouts from JEPI are insane. If you look over here to this column where it says yield, or forward yield, they're paying 12.62% annually. That's massive. There's 12 months in a year. So it's basically like 1% a year. 1% a month. That's awesome. Like, that means you have $100 in the bank, you're getting $1 a month. That's really good. So yeah, JEPI, I'm definitely excited to build my wealth in that. Pepsi, similar story to Procter and Gamble. We have 6% of a share, but again, dollar cost averaging, it's a good way to get into that. Those bigger shares, those bigger stocks over a long period of time. But as the market goes like this, you're buying at the top and you're buying at the bottom. So you shouldn't be overpaying for it. Again, it's a great way to get into something like Pepsi, which is super strong. And that brings us to MPW. Guys, let's talk about MPW for a second, right? I covered it, kind of in depth the other day. MPW, we almost have an entire share on our first day. Huge. So, at 11.53 a share, we've put in $10 or $9.94. We have 0.86 shares. And guys, this is another big payout dividend monster, right? We're getting paid 10.41% on that. So if you had 100 grand in MPW right now, you're taking out 10 grand a year. That's sweet. As far as this goes, like, it's just investing back in over and over again. Unfortunately, we missed the cutoff date for the dividend for this month, but we should get paid next month. So that's pretty solid. Definitely excited for that. Then we have BlackRock. So BlackRock is $712 a share. Guys, I don't own a share of BlackRock in any portfolio that I have. I don't own a full share of BlackRock. I am stoked to hopefully get there. Right now it says we have 0.01 shares. So 1% of a share by the end of the year. Hopefully we've got that full share. And that's kind of flex in its own right. Be like, bro, I traded full shares of BlackRock. What do you do? Meanwhile, you put in $5 a day. It's so good. But yeah, so that's pretty cool. It's good to see it. It's all kind of importing in and like already some progress, guys. Our total balance up here on the top right hand side, we have today's gain 0.4%, $1.69. Total value $428.89. And then health score. This is not the happiness, health, and wealth that I talk about because I am not a 3.81 in the health department yet. I'm trying. I've actually been like eating salads and stuff. Shout out to Demos, which is like kind of close to me. It's like a little Greek place. They're like, dude, you keep eating the salads. It's the thing. But health score, Seeking Alpha has rated my portfolio thus far a 3.81, which is pretty sweet. I'm actually happy about that. So 3.81, they are saying, watch out. I have one stock that is performing badly. I'm sure it's probably, I didn't look at this. Oh, it's this one random stock that I can't sell out of the portfolio. So if that's what I'm getting hit on, like that's awesome. I love that. If I could get this thing out of my portfolio, I would. I might just buy some just so that I can sell it all. I'm going to do that. So if you guys see like a random trade for like $5 and then I sell it again for $5, it's me getting that out of there. So with a random stock that I don't even have, we're at a 3.81. So the critics like it. Dividend safety score. Now this one I had a little bit of beef with. I got a little salty about it. But there's two reasons why, right? One is that four of the stocks aren't covered. So when I look at what's not covered by this with the dividend score, we have JEPI, right? JEPI's not covered, and that's a massive dividend pair. We have SCHD, which is again like basically the S&P 500 but tailored towards paying out dividends. We have JEPQ, which is brand new, so of course it's not covered. And then we have that stupid stock that I can't get out of my portfolio. So with those, that's what that rating's based on. When I go to one very risky stock, that is the safety score rate here. So that's Ford. Ford has an F for being safe. They're all over the place. Now, here's what's good for you guys is I'm not buying any Ford, right? Ford is a stock that was in the portfolio that I had 10 shares of that I decided to leave in there because they do pay dividends. And I figure, hey, it's Ford, it'll go like this forever and I'll get a little bit of dividend to try to build up the stock value and whatever. So what I did, because I was very salty about it, was I went to a college GPA calculator and I took all the ratings of everything and it pretty much matched, right? So I did give 2 credits to Realty Income Trust because I have twice as much in it. So I figured that's, realistic and it matched up. If I take Ford out, right? Because we're not investing with Ford on the channel. We're at 3.0. All right, sweet. So, also, I love smoking meats. I keep getting ads for Wagyu everywhere. Great choice. We're not talking about that right now, but I keep getting ads for fancy beef. I like good steak. But anywho, so I was so salty about this rating over the Ford stock that I was like, I got to see what this is if I take the Ford stock out. And then this is the best part. All right. When I saw this, I got super excited. I know you guys are hopefully if anyone's actually following along or trying to do this themselves, this was like the best news that I could get. I got a C plus on valuation, which is fine. I'm not after value. I'm after dividends. I'm after making money. Okay. Right now across the whole market, right? Growth is not that good in a down market. When things are going down, it's hard to have good growth and good momentum and good earnings per share, right? Earnings are down, the stocks are trending down, that's your momentum, and your growth is trending down. However, My profitability gets an A. Guys, if this isn't about anything else other than profit, I don't know why we're doing it. We're investing to make money. So I was super stoked to load this up and say, like, hey, you're not failing at anything. You got some stocks in there that aren't even really in there, and you're still getting an A on profitability. That was the best news I've gotten in the past week. I was pumped. Um, Obviously, it's one thing to pick your stocks and spend like months trying to figure out the perfect little blend of like growth investment and dividend growth stocks and all that. And we landed a pretty good score. We got a 3.81, and we got an A on profitability. Uh, I'm good with that. Like I'm pretty stoked. So really, really motivating. Like motivating for me. I didn't expect to get a good health score, growth score, or anything like that, especially when you look at these numbers on the side. These are the year-to-date performances on some of these things. Like, sheesh, not ideal to see something down. Well, that this stock isn't even in the portfolio, but not exciting to see that. You got a holding at 52% down and 44% down. But I'm glad that at least all of the ratings that come from all these people and whatever, at least moderately agree. It makes me feel good about it. So that's a big win for me. Another thing though is just, guys, we have something here. Like, we're making money already. We're up $1. We made $1, right? That's how it starts. Okay. Today it's $1. Tomorrow it's 2. Then it's 3. You're like, wow, we just made $6 in the past 3 days. It's pretty good, right? So that's the whole thing. Anywho, super stoked about it. So I kind of had to I just had to jump in and make a video. Like I had to. I was too excited. Thanks again, guys, for everything. If you do want to jump in and start investing in stuff, obviously do your own research. I'm not a professional stock trader. I'm just a guy like, in a closet basically. So yeah, do your own research. But if you do want to sign up for Sofi, they got a pretty good promo in the link in the description. So hit that up and good luck. And we will see you over the next couple days.